Okay, now we're back recording. Admit. We got Aaron in here. Hello, everybody. Let's see. Hello, hello. Hi.
Hi. I decided to go grab my headphones. I'm sorry.
Welcome. Is it Teresa or Teresa?
Teresa,
Teresa, thank you for joining us today.
thank you.
Hello, hey Aaron. Brianna. Evening, everybody. So we got the waiting room beginning to fill up here. So we'll give it about another 5 to 6 minutes before getting started. We have a really good presentation on pitch deck fundamentals, of course, and I'm excited to get into it. How's everybody's short week been so far?
Mine's been good. I've been looking forward to next week.
Yeah, right? Happy holidays, everybody.
Thank you.
I thought it was Wednesday because a client tried to call me today and was like, hey, I tried to call you for our call. And I was like, oh, shoot. And I had like the kids everywhere. I didn't have my headphones. And then she was like, oh, I'm sorry. It's for tomorrow. I was like, I had a mini freak out.
Whose birthday is it, Aaron?
It was Evie's birthday, my oldest. She turned 3. So we have like all of this.
I see the decorations, yeah.
Thanks. Yeah, we worked so hard on it.
Yeah, looks like it was a lot of fun. Quarantine party.
Yeah, just his parents came over, but of course they came over with a whole bunch of gifts, so she didn't feel like she was missing out. I don't think she even remembers her other birthday parties where she had friends over, so it's kind of good.
That's a good age.
Can I ask if everyone here is already networked or associated with each other?
Yeah, absolutely. So you are driving into our cohort. This is the Billboard cohort. And this is a course. I think this is our 4th workshop within the cohort. So we started back in November. We go to about February. So for the most part, everyone has met through virtual sessions, right? Because we launched during the pandemic, this program.
So should I or should I not be here?
No, you absolutely should be here.
Okay.
Yep. Yeah. We'd love to have you.
Thank you.
All right, so I'm gonna go ahead and test my presentation, make sure it's up and going good, and then we'll give it another 2 minutes and then go ahead and get started.
Hi.
Okay,
Dollar bills, y'all.
Can everybody see this?
Oh yeah.
Great.
Yes.
Cool. Awesome. Okay, so it is 6:05. So I'm going to go ahead and get started. Let me check the waiting room one last time. Check the app, make sure nobody else is joining with us. And as always, everybody, this course, along with the rest of our workshops, are available and uploaded to YouTube so everybody can get caught up if they miss. So, it's never too much pressure to make it, but we love to, when you are able to make it, to be able to interact and get the most out of the workshop. Cool. Okay. All right, let's get started. Okay. All right. So today we are here to talk about pitch deck fundamentals, a look at a fundamental raising tool known as the pitch deck, right? So yesterday when I put out a post about this course, like I led the course by saying underrepresented founders are overfunded. Over-mentored, over-coached, and under. What was that? Sorry. That underrepresented founders are undercoached, overcoached, over-mentored, and underfounded. I'm getting a little background noise from somebody. Might need to go on mute. Okay. Cool. Oh, okay. I'm sorry. Got a couple more people in the waiting room. Here we go. Okay. I think everybody's in. All right. So this is a fundamental raising tool, a fundamental fundraising tool known as the pitch deck. We're going to get right into it. So as a startup, as an entrepreneur, your fundraising options typically are going to be, depending on what stage you are, they're going to be basically starting with your family and friends, debit and credit cards, grants, crowdfunding, your customers, and venture capital. Those are typically going to be your options. So depending on what type of business you are, typically your high growth potential companies are what we're going to typically see in the VC field, right? That are going towards venture capital. So what is a seed stage? So angels typically are in the range of 25 to 250K, accelerators 20 to 150K, institutional seed 500K to 1.5 million. And as you see, your series A, B, and C is going to be your 2.5 to 10 million plus, right? So the seed is the setup round where a person or startup venture approaches an angel or a VC firm for funding their product or idea. Before you fundraise, before you fundraise, you're going to want to seek advice, right? Before you kick off the fundraising process, you're going to build an experienced advice team that can help with strategy, introductions, and general advice. So typically you would find that from founders, successful executives, professors, industry experts, investors, influencers. Fundraising goals set round size. So this is really going to be the basis of where you decide how much money you need, right? How much money you expect to need in this round. And essentially estimating the amount of capital you need requires more art than science, right? Because even though you might expect or see yourself needing, say, 100K or 150K, the reality is you might truly need 250K plus, depending on what your goals are in this stage. So make sure you raise enough capital to give yourself 18 months. This is known as your runway. Keep in mind, it will likely take 3 to 6 months to raise a Series A. Dilution. Every time you raise a round, try to sell no more than 10 to 25% of the company. Target. Set a modest raise amount. It's always better to know your target, say you're oversubscribed, and then increase the size of round depending on investor interest and terms. Now, I know in this cohort, we have various levels of businesses, right? So most of you all aren't at the stage where you're seeking venture capital. So even though this slide is specifically talking about the setting your round size for venture capital, I want to make sure that it's understood whether you're fundraising for a small go or micro go, whether you're fundraising for a special event or some sort of project that you're trying to do. This is pretty much the same process, right? You want to make sure that you set enough runway, make sure that you consider more factors than just the amount of cash that it's going to take you to get started. And then that sometimes is I'll say many times is an area that a lot of startup founders make, is they underestimate the amount of money that they're going to need. So let me pause for any questions first. Does anybody have anything they want to ask yet?
I have a question. This is Alexis.
Hey.
So when you have
what are the factors? What do you need to really factor into your initial startup cost for the
Okay.
amount that you're seeking?
Yeah, certainly. So one of the main factors that you're going to want to consider is like the cost of people, like human capital, right? That's something that we typically undervalue. So the amount of employees that you might need, the type of skill levels that they might require, and the types of salaries that those might require, et cetera. Of course, equipment costs, depending on what type of startup you are, that's something that I know is very relevant to products and services that are physical. Make sure that you look into those equipment costs, what it's going to cost to maintain those types of equipments, any type of debt that you might incur, like you want to make sure that's included as well. That's something that sometimes is kind of a blind spot for new entrepreneurs. Does that touch on those points for you, Alexis?
I'm sorry.
No, you're good. That you were there?
Yeah. Yeah, I'm here. I'm driving. That's why.
Oh, okay. Yeah, no
I'm
worries.
a
Okay.
little crazy.
Yeah, no
but that
worries. So,
that makes sense.
yeah, yeah. And the main thing, like I said, what I started off by saying is that we definitely want to consider human capital, right? Like the amount of money that it's going to take to sustain and to make sure that we're not expecting when we're talking about fundraising to be working in our business, right? Because we want to be able to work on our business, but not in our business. And we want to make sure when we're fundraising, because of course, if we're seeking these funds, that means we're looking to scale, right? And scalability comes with your ability to be able to outsource and to delegate. So we want to make sure that we're considering that, and that's one of the main things I would say to not overlook, right?
Okay.
Yeah.
Thank you.
Yep. So as you see with the number 3 point, it's like set a modest, raise a modest. It's always better to nail your target, say you're oversubscribed, and then increase the size of the round depending on investor interest and terms, et cetera. Okay, we had 2 people in the waiting room. Great. So this right here is what I would call the best investor pitch deck outline. Of course, it varies. I also have a slide in here that talks about if you're doing a different amount of slides than your typical 10 slide or less, right? Because that's what we typically see with the pitch deck is 10 slides or less, but I have a couple options that you'll see here. So on your first slide, of course, it's going to be a cover slide. Next, you're going to have your elevator pitch slide. Next, your market problem and current solutions. Then your market opportunity, where you define market size and target client. Your solution, this is of course one of your most important ones. Team, if really impressive, move after your elevator pitch and lead with it. Board members and advisors, optional, combined with team slide if you want to shorten that a little bit. Traction and awards, this is where you're going to put any awards, any pitch competitions you won, accelerators you've been a part of, etc. And then from there, we go to the market fit competition slide, competitive advantages, revenue model, expense model, financial projections, exit strategy, the ask, right? And then closing slide, questions and contact details. Now, the next slides, we're going to obviously get into this in more detail, but I wanted you to get at a glance, right, what the winning combination is. And typically, like I mentioned when we start, 10 slides or less because we want to get straight to the point. We want to be simple, concise, and also understand that we're not necessarily selling at that very moment, right? A lot of times when you're going into an investment, you're going to raise some money, they've already made up their mind and or already know whether or not they're going to be involved with you, right? So you want to make sure that you're not putting the pressure on yourself to feel like, I've got to nail this, I'm selling this, et cetera, because that's not what it is. Don't forget that you are the value, you are the prize, right? So make sure that you have that going into it. So, and that helps to also alleviate the stress of feeling like you have to nail this or you have to do something particular. Again, this is not a sales pitch when you're looking for investment. You're looking for a partner, right? You're looking for someone that's going to grow with your business. And then also another point, shall I say, is venture capitalists, VCs, make money off of investing their money, So don't forget that it's their job to put money into companies, right? So their performance is based off of doing what it is that you're trying to offer them, which is give them a viable business to invest in. All right, so going back to various deck size options, again, like 5-slide deck, you can combine 1, 2, 3, 4, and 5. This will get your points across. 10-slide deck, don't include the optional slides. You just use that 0 to 10 that I have in this previous slide, which you all will get a copy of this, of course. And then if you have the opportunity to do a 15 to 30 slide deck, then you can go a little bit more in depth. That's usually when you have a partner that's already showed interest. And this might be your second meeting or so, and you want to get deep into it. And there where you see the LTV versus CAC, we're talking about the lifetime value of a customer in opposed to the acquisition cost, right? We want to look and be able to explain to the investor, hey, this is the value this customer, this is the value this product and this business will give you over the lifetime of a customer, right? And that's how you really talk about value to an investor. Okay, so the cover slide, right? This is about you. You want to get your name out there, your logo, your presence, the purpose of the presentation, the date optional, right? I'm not a fan of using dates, of course, because it's dated. Every time you go to present it, you're going to have to change it. And then also it might possibly put some doubt in the mind of the person that you're looking to get some funds from, because they're like, hey, you've been doing this since 2017 and you haven't raised any money. What's going on here, right? So we want to, that's a little hack. Stay away from dating it, right? And then other optional additions are the logo of accelerators, awards, publications featuring company, slogan, name of presenter, CEO, etc. if you want to add a little bit more to that slide. And then this is your elevator pitch slide. Now, the elevator pitch is super important, right? Because most of the time, you're not going to have the opportunity to go through a whole presentation with somebody. Now, I know when you're in a formal setting looking to pitch to a VC or an investor, you might have that opportunity. But most of the time, guys, before you even get to that VC or the investor, you have to impress or catch the attention of somebody with an elevator pitch, with them having some sort of brief introduction to what you're building to get the interest from the group. Now, to put that in perspective, VCs and venture capital groups, they process, I believe the number was around 1 to 2% of all the applications they get. So the chances are, like if you're blindly submitting to a VC firm or looking to a option for investment, chances are you're not even going to see your request or your deck. So what does that tell us? That tells us that relationships are what are important. Having somebody at that firm, a partner at that firm, or somebody in that group is how you get in there with that investor, right? Because just like anything else, whether you're selling a product or service, cold introductions are going to always take second, are going to take the background to a warm introduction or somebody that's been introduced to you through a friend or a partner, right? So going back to the slide, the elevator pitch is super important. And this is something that outside of the slide you want to take with you. And I'm going to call on somebody on this call who did a really good pitch to talk a little bit more about their elevator pitch. But before I do that, again, what's the service or product? What's the core problem? Describe the pain or need that you're solving. What's your big vision? And then graphically show all of this if possible. And use less words than on this slide, right? Because we want to simplify it. This is a one-liner. This is like the taste. So make sure that we keep it very short and simple. So with that, Brianna, I know I mentioned to you that I might be using you as an example, but Brianna recently won a pitch competition. So I wanted to have you come up virtually and tell us briefly about that experience and briefly give us your one-liner that took first and second place. Congrats again.
Hey everyone. Thank you so much. Yeah, so let's see. I just shared that this was actually my first time doing a pitch deck. I've done a pitch competition before. This is my first time actually doing a pitch deck. So I'm happy that we're going over this so I can see how to do it, because Googled some things and tried to make it. And we actually only had, we could only submit 6 slides, including our cover. So I had to kind of cram everything in there.
Gotcha.
Yeah, but my, I guess like my one-liner is I help women who love big earrings wear big earrings. And I really just, I started off my pitch with a story talking about how it came about, me wanting to wear big earrings, but them being too heavy, and how I created it on my own. I made sure I had like a few points that I knew would get the judges to laugh and really connect with me, things that were relatable. And yeah, and then I went for it, the ask, and put the slides together. But I'm not sure. Let's see.
No, that's great.
Mhm.
Great, thank you. So yeah, as Brianna said, right, you want to provide that service or product in a short one-liner. You want to talk about the problem you're solving, and you want to speak a little bit about your big vision, right? Because you want to capture their imagination and ultimately get to the point where you're able to do a 10-slide or a 15-slide pitch deck or presentation. Great, thank you, Brianna.
No problem.
Okay, so moving on to the next slide, right? Your market problem, current solution. What's the problem or unmet need you're solving? Clearly show the pain point. Clearly show the pain or the problem, or convey the strong need that that's currently unfulfilled. Don't just say it, right? You can't create demand. Usually only market leaders can, and solve your client's #1 problem, not their 4th or their 10th. What keeps them up at night? What really bothers them, right? That's how we define market problem, current solution. That's how we show that there's a product market fit for what we're providing. So we want to put that into this slide and communicate it clearly. Potential appendix slides. So your VC's favorite slide, lifetime value. We touched on this a little bit in the other slide, versus cost of acquire customer. Timeline, which would be your history, milestones, and prior fundings. Detailed value proposition to clients, users, and partners. Additional screenshots from demos. So this is if you have a product, technology-based product, typically would put demo shots on their slides to show the user interface or the user interaction of their product. Average revenue per user, pipeline of potential clients, show that you're desirable, right? Churn rate by cohort analysis, detailed financial breakdown, revenue percent, et cetera. Cash runway, breakdown analysis, and headcount projections, employees, et cetera. So these are possible potential appendix slides that you can add. And this is when, again, when we get into if we have the opportunity to do a 10-slide or plus. If you've got 10 slides, leave all these out, right? Just leave them all out, because you want to get straight to the point. And then, of course, you can follow up with these or provide these in a follow-up email or something like that. Finishing up the appendix slides, partnership agreements and structures, proprietary aspects not discussed in core deck. Again, these are things just to show your value. So even though if it's not listed here, if there's something else that you believe that could be added to this, something to show your attractiveness to the potential investor or partner, these are the types of things we want to include. Additional strategy slides, capital structure, list of competitors, capital raises investors, summary slide, why we'll be successful, right? Add if deck is over 15 slides. Otherwise, that's too redundant because you're already talking about it. So moving on to our next slide, market opportunity. What is the total addressable market? The reason VCs love this is because when in venture capital, when you're investing your money, you're looking to not just make a small gain, you're looking to make a big gain. So when we're talking about total addressable markets, we're showing the size of the market. We're showing, hey, there's a lot of money out here. There's a lot of customers out here. There's a lot of demand. This is what we're working with. This is what we're trying to get a piece of. What's your real target market size? So the subsector of the general market, who specifically are you looking for? An example would be total sales of mid-price women's shoes online versus total on-time online retail sale, right? General market. So even deeper, right? name it, size it in units or revenue, growth rate, and projections, define target client, key characteristics. This goes into like persona building. This is something we talked about in our previous workshop with Jose, right? We want to be able to define our target client. Examples of consumers versus enterprises, demographic target versus types of businesses, small versus large, examples of ideal individuals or clients. So here you want to be able to communicate, for example, say you're selling a product specifically for web developers to make their life easier. You want to show essentially why this is your ideal client, why this market is right for you, and why you're a right fit for this market. Current demands and unique needs. Describe any important market evolutions and why they're not an inflection point. This is displaying the market opportunity, and this at a glance will give your investor or your partner an idea of the market and what your, and most importantly, what your knowledge of that market is. Any questions here before I continue? We're going to take a couple breaks in between to open up for any questions. None? Okay, I will continue. All right, so this is important, right? Your solution, your demo. So show over tell, 1 to 5 slides of your product or service, show screenshots of key parts of business. If you have time in a meeting, show a live demo, but not when pitching on stage. That's important because too much of your time will go through the technicalities of that. And you also wouldn't want to have like a technical failure or a mishap while presenting that. Tell a story of a future client or an example of a current client. This is always great because it humanizes your process, humanizes your service or product, and brings it home to the person on the other side of the table. Show the core value proposition to a client, right? Better, faster, cheaper, more economical. That's what you want to portray. That's what you want to get across, that you're better, faster, and you're more economical. You're always going to have competition. You're always going to have bigger players. You're always going to have faster, smaller players. But you want to show that you're the right fit for this partner and you know what you're doing. Team slide, right? Important. Core team, the founders and chiefs. Photos are optional, relevant experience, successful exits, failures, good war stories, right? This is always good because it talks about the experience that your team has in your industry or in past industries. It shows your leadership experience. Education is important also, if that's what you want to highlight from your team. You really just want to look at your team, their strengths and weaknesses, and highlight them briefly on this page. We are the right team who can execute this business plan because that's what you're trying to get across. Don't write sentences, do 1 to 3 brief bullets per person, or even better, do 1 key bullet per person. Keep it short and sweet. Board and advisors. So a board of directors, board of advisors, this is where you want to just show that you have good direction and you have support from industry experts and people with a lot of experience in your specific area and or can contribute heavily to what you're trying to build. How can they help other than being a big name? That's what you want to communicate here. So I would give an example, but for the most part, you're looking for relevant experience, right? So if you are working in the hair industry or product industry, you want to find and build out your advisory team diverse, right? Because you want people with different backgrounds, individuals that have different things they could bring to the table, but you want to have the common denominator to be that they have the experience needed to drive what you're building forward and to support you as you scale and grow. Traction performance awards. So this slide is like your timeline, key milestones, soft traction. See other people think they're awesome. We're awesome. Accelerator programs. Look, we've graduated with desirable awards, #1 best startup, lots of articles about us. So essentially this is like what we would describe in marketing as like earned media, right? Like you're showing that you have earned a name and earned being an authority in this area. we're performing amazing for clients. Look at these results, see our key business metrics, see we're doing great, show increasing number of customers, increasing total revenues, increasing revenue per customer, LTV, as we discussed, again, that lifetime value. In the end, this is all that matters to investors. How much value can we get over the lifetime of this customer? That's important to portray. So again, traction performance awards. We want to, this is where you want to, you know, toot your own horn, right? And that's primarily what you want to portray. So you want to pull on your strengths and where you've outperformed or been awarded, put that there. So market fit competition. Now I know we briefly talked about this a little bit earlier in the presentation, but you want to show how you fit into the market landscape. Direct competitors versus indirect competitors. How much capital raised, which investors' revenues, key stats. Why won't indirect become direct if they see what you're doing works? Your biggest competitor is the status quo. Your customer, why will your customers switch to you versus the incumbent? Are you changing customer behavior? So these are the things that you want to consider and put into your presentation and communicate. So types of diagrams and charts or market landscape. I have an example of that coming up in the next slide. And then the feature list comparison. So this is something that I use for events. Like if we're doing, like for example, for our startup weekend, we use feature list comparisons. Often products will do this as well, but I don't necessarily recommend that, right? Because it makes you look, one, it's confusing, but it also makes you look 2 to 3 times better. It's like you look just a notch above the competition. One which we want to show is that we are 10 times better than the competition. So I would say market landscape, stick to that in your slide. And for the most part, unless you are doing a specific event or doing specific sponsor levels for a project, then that's when I would use the feature list comparison. So I'm pausing here for any questions. Does anyone have any questions about competition, market fit, or any of the previous slides that we just went through? Okay. So I'm going to keep going.
You're doing such a great job. No one has any questions.
Great. So here is a little exercise we're going to do very briefly. If you have a sheet of paper, this is going to be your market landscape, right? So if you do have a second, you can work through this as we speak. It's a very simple market landscape chart. You put your company in the top right. As you see, quality, economical on the left-hand side, company A, B, D, C. You show where you lie in comparison to the quality, and you are the best. You have the best quality, and you're the most economical. Remember, that's what we said. We're better, and we're more economical. And then top right, expensive, discount, economic, you see that on the right as well. You put your company in the top right corner and essentially show why you're much better than your competition, why they should go with you. So this is a market landscape. So if you have the opportunity, go ahead and screenshot this and work through this as we talk over the next few slides. But if not, again, this presentation will be sent out afterward, and you can just participate and do it then. So this is, again, that feature list comparison I was just saying that basically makes you look 2 to 3 times better. As you can see, there's a bunch of check marks on this page, right? And there's a bunch of lines. And most people will put a lot of information, try to squeeze a lot of information here. And they think that it makes them look a certain way. Now, it's not that it doesn't when you're talking about specific things, but again, what we're trying to really get across is that we are 10 times better, not 2 to 3 times better. And for the most part, these feature list comparisons just show that you're a notch above. So we want to, again, use it in maybe as an appendix slide if you want to use it. And again, if you disregard that advice, if you're doing a project or a sponsored tiered type raise where you are looking for different tiers of sponsorship, then you want to show the comparison, right? But as far as like a feature list comparison, if you're doing a service or product, we want to stay away from that and try to make ourselves look 10 times better. So competitive advantages. This is an important slide because you're basically again showing why you're the right team to invest in and you're the right team to partner with. So current competitive advantages, you want to list that. Sustainable competitive advantages, unfair competitive advantages, patents, key relationships, partnerships, barriers to entries for new players, right? A lot of industries, that's going to vary depending on what industry you're in. Some industries have a lot of barriers to entry, while others are very easily accessible. Money, time, expertise, relationships, patents, competitors, competitive advantages, weaknesses, right? So that's what we're doing on the competitive advantages slide, is that we're speaking to these reasons why we have the advantage over our competition. Revenue model, right? So this is always one of my favorite slides because you're talking about how do you make money, key revenue streams, pricing, flat fee, percentage, why that rate, et cetera. So of course, it's going to vary depending on what product or service you're offering. But essentially here, you're laying out how you make money. Reoccurring revenue frequency, is there a big difference between gross versus net revenue? Explain that. High volume versus low volume business. Example showing math. I just put a couple right here. 100 clients times A units times B fee equals C revenue. Easy to apply multiples. 10 times, 100 times clients, stick to those, right? Because you want to easily be able to communicate that. Cash collections immediately 30, 90 days. So you're communicating when you plan on bringing in that revenue and bringing in that cash. Expected conversion rate to get a paid client. Expected average revenue per user, lifetime value of customer. Again, we're going to keep talking about that because the people that you are trying to get these funds from, that's what they care about, the lifetime value of customer. So that's what we want to get here. So again, are there any questions about this slide? Because this is a very important one, right? We're talking about why we are investable, why we're scalable, and why we are the company or project to invest in.
I do have another question. This is
Yeah.
Alexis again. So when you're talking about lifetime like that, if you have, like, say for instance, I have customers that have been loyal since the beginning of my product launch, and that's been a couple of years, so like about 2 years basically. And so they leave comments about, I don't want to use anything else. This is a lifetime product for me. Is it a good idea to include like reviews like that, or like short little snippets of what customers say in this type of pitch, or should we just leave that out?
Yeah, so social proof, right? That's what we call that, social proof. The peers and the customers talking about and becoming advocates of your product or brand. We definitely want to show that because that speaks to that lifetime value of customer. So an example speaking directly to that, it's like, hey, not only by selling this product to this person did I not only did I gain revenue and I'm making sales and they're continuing to come back and purchase, but they're also becoming advocates, speaking about us and creating more value by bringing in more clients. So that's social proof is what we call it. And that's always great to add in there, right? Because it's one thing to toot your own horn, but it's another thing for customers to toot your horn, right? Because, you know, that's a whole different type of proof.
Right, okay.
Yeah, that's validation, that's product market fit. You know, that's what we want to achieve ultimately, is for our customers to become advocates of our companies and brands. And that's always going to be a very valuable thing.
Okay, thanks.
Yeah. So any other questions in regards to the prior slides or revenue models in particular? Okay. So financial projections, right? This is the fun stuff, not really, but this is important. So number of years projected, early, mid stage, 1 to 2 years, historical is 3 to 5 year projections. Pre-revenue, angel seed stage may show 8-year projections, counts for 6 months to 1 year to build technology before generating revenue. So of course, guys, most startups aren't going to make money right out the gate. Now, I know that's not like what people want to hear. That's not what people want to hear, right? Because everybody, you know, wants to be able to make money right out the gate. But when we're talking about, and I'm that's not applicable to every type of company, but when we're talking about high growth potential startups, a lot of them are heavy loaded up front. It takes a lot of work and traction at the beginning, a lot of resources poured in at the beginning for a later payoff. So that's why we do this. That's why venture capitalists do what they do, is because they believe that their investment is going to turn into a payoff. So don't feel the pressure to feel like your projections have to show you making all this money up front, because that's not really how that goes. And that also has its advantages and disadvantages. Like, how many of you guys are aware of, I forget the company, but it was a Quibi, right? $1 billion valuation. They raised $1 billion and they closed within 6 months. They don't exist anymore, right? So the point is, like, don't put the pressure on yourself to feel like you have to make it seem like you're going to be profitable from the jump, or that you're going to be the next Zuckerberg at the beginning of your process. Make sure that you are showing a realistic runway, a realistic path to profitability, right? So again, 1 year to build technology, or 1 year to build up your product, et cetera, before generating revenue. Don't be afraid to include that runway, basically. So, and again, in the financial projection slide moving forward, target market size versus acquired customers, show total number of potential clients and target market per year, show growing market size. So you want to show the opportunity in what you're doing. You want to show that if I put my $1.8 million into your company, in 2 years, some technology or something's not going to change where this isn't even, still profitable. So you want to show that your market is growing. You want to show that there is growth opportunity in your market. So moving on, number of free users versus revenue generating users is something you want to include here. Show total number of clients per year and percentage of market penetration. And I have an example where you'll see all this broken down. But essentially what you're doing here is you're showing the amount of clients that it takes, the amount of clients, customers, or whatever that it takes to achieve certain benchmarks, right? And then what percentage of the market that we defined earlier are we penetrating? So if it's $100 billion market, what does our 1% of that market equal out to? And then what we want to project is how much of that market are we achieving over the years? So in year 1, we might be 0.2 of that market, but by year 3, we want to have 0.4 of that market. By year 4, we want to have 0.6, whatever it might be. That's the general consensus of what you're doing, is showing your penetration of that market. Next shows entrepreneurs' sanity, growing from 0 to 1. The 5% penetration is usually sane and conservative. Acquiring 50 to 100% of the target market is insanity. Don't believe that you're going to get 150 to 100% of the market, right? I mean, if you break it down into a small market, maybe if you're talking within a specific region, that's possible. But realistically, you're defining a huge market, so it's realistic that you're only going to get a certain percentage. But the thing is, the gag is, if you're defining this huge market, 1% of $100 billion is still what? $1 billion. So you're just being realistic in what you're projecting. So financial projections 2, high level financials, main line items, your total revenue, total expenses, margins, optional breakout key revenue streams and gross, optional breakout key expenses.
Do you want to define EBITDA?
Yeah, no, I have it right here. So, boom. Financial projections 3. So this is an example of what we're talking about here. So remember what we're talking about here as far as market penetration, right? So with this example, as you see, your target market is at 14 million. Year 2, 14.1, and you see the progression there as the years go by. Target market users, you see that how that grows as well, from 47 to 180,000, 454,000. And then going down to our market penetration active, right? you see, remember those numbers that we talked about that keep us sane, right? So 0.02 of that market, 0.11%, 0.26, 0.44, 0.64, and that's where we get our revenue number, 647. Boom, boom, boom. I'm not gonna go through every single number. Excuse me, I think I got somebody trying. Okay, so revenue, again, total annualized revenue, you see those numbers, 1.6, 7.8, and then go back down to our expenses, right? So this is where we get into the details of why necessarily making certain revenues don't always equal out to the numbers that you would expect once you get into it, once you get into those numbers. So by year 5, your revenue is at $30 to $50 million, ideally $100 million plus, $10 to $25 million. And again, that the EBITDA is earnings before interest, tax, depreciation, amortization. Check comparables in industry. VCs look for 100 million to a $1 billion exits, right? So remember, this goes back to what we were saying as far as making sure that our total addressable market is big enough. So make sure you check your comparables in industry, like I said, initially investing at 10 million to 100 million post money evaluations. And again, those earnings margins usually range 10 to 40%. Good sanity check on model. Look up public companies in your industry or reports to see what is normal. So that's where your Crunchbase, those are some ways that you could do some research as to what types of rounds people have raised in your industry, right? So we want to make sure that we do our due diligence and see what our other companies in our industry is doing and how can we make sure that we're aware of that and that our information reflects that. So I would strongly suggest that when you are doing things like financial projections, that you have an expert to be able to advise you on this specific area, right? Because this is not something you want to necessarily shoot from the hip with. Now, I will say that again, like we said earlier in the presentation, it's more art than science, right? But that's like when we're talking about in general, right? Like it's more art than science, but we want to show to our investor or to our potential partner that we have done our due diligence and that we know at least a ballpark or at least close to where we're trying to get to. So I'm going to pause here and then I'm going to also ask Quentin if you want to step in and make any comments, right, on this specific area or inform us about any insights you might have. As most of y'all know, Quentin is a financial expert, an investments expert. So if you have anything that you want to add, Quentin, please go ahead.
Yeah, sure. So I know I've spoken to a couple of you guys. A lot of times within a pitch deck, especially talking to VCs or interested parties, is just like you guys are looking at these financial projections, they're looking to see when the profitability comes in, right? They look highlighting usually the margins and when, like the time that they expect you to hit profitability. Because if they're investing the money, they're hoping to see a time at which that'll come back. Sometimes, and I've said this to some of you, having a 5-year projection, although is nice, in much of reality, having a projection cycle beyond a year is unforeseeable, right? You are giving them an idea of what it can be, but it tends to be fuzzy. Most times things will change over the year, maybe a tactic, maybe something, a cost may be incurred, things of that nature. There are unforeseeable events. But what's more important to a VC a lot of times is understanding your base assumptions as well as your expected time to profitability. And that can be, that is normally associated with a set milestone goal that you usually will set for yourself. And so I always tell people, you know, it's important to have these yearly projections, but it may be, depending on your type of business, more important to base it off of a milestone. Some of you are going to be dealing with profitability based off of a release of a specific product or project for that matter. And others, it'll just be like in here, it's just like about getting the number of users, right? Awareness, users, and pay users. So keep that in mind. Structure it. Think about what your business model is. Think about what that's going to take, and then structure your financial projections based off of that. That'll really help when the questions come from the VCs or your interested parties, how to answer them. Because a lot of times, you know, they know that these numbers are guesstimates, but understanding, you know, how you got there, why you're making these projections based off of these timeframes will get you a lot further. So that's my piece.
Thank you. Thank you, Quentin. So moving on, I don't know if you want to mention, come back in and mention anything about investment terms, but if not, I can give a brief overview here.
Look, I'll let you, if there's something after you've mentioned stuff, I can certainly add to it.
Okay. So capital raise and use of proceeds, right? The ask. So this is what, you know, this is quite frankly, you're asking for money, of course. So this is what you're asking for. How much capital are you looking to raise? Stage/size, example, your seed round. So remember, we broke down the different rounds up to 500K. Series A, 2 to 3 million. Investment terms. These are things that you want to be, you know, aware of. Preferred equity, so the amount of equity that is preferred by your investor. Your pre-money evaluation. Convertible notes, so these are notes that can be converted to stocks or shares of your company, etc. So I would say you don't have to be like an investment expert, or you don't have to study, you know, go take a workshop or read a book specifically on investments, but I would say to at least, before you try to go out and get any venture capital specifically, at least be able to speak the language and familiarize yourself with investment terms. Okay, so investors in rounds. So previous investors, new investors, founders, key angels of strategies. So here you're showing your strength again, right? So average monthly expenses, how long will your new money last? This is your runway we discussed about. Prior investment round, size, investors, valuation, key terms, right? So this is again showing your strength, showing what you've done to get to where you're at. And then of course your use of proceeds. Name it and include the amount. Sales and marketing, hire key employees, founder salaries, and then Alexis, you asked a question about this, right? Build out, further develop technology, file patents, achieve key milestones, first client, get to break even, 3 times revenue growth. This is why we take the money. This is why we ask the money. We don't ask the money to not scale. We get the money to scale. We're given the money to scale. We're invested the money. We're partnered to scale. So we want to not be shy here. We want to do our due diligence, and we want to explain the use of proceeds, why this money is going to take us to the next level. And of course, like I said, don't be shy, right? Because investors, VCs, they're here to give you money. That's what they do for a living. So what you want to do is just show why you're the team and why you're going to give a great return on their investment, ROI. So how much capital are you looking to raise? This is just going back to our terms: capital raise, seed round, boom. And then of course, our closing slide. So one thing I want to reiterate, don't forget, the goal of your meeting is not to sell yourself. The goal of your meeting is not to ask for money per se. The goal of your meeting is to get to the next meeting. Because remember, we are talking 10 slides or less. 10 slides or less, sometimes 1 to 5 slides. Sometimes it's just that one liner, that elevator pitch. But let's bring it home. Your logo, big and in the middle, link to site, any questions, contact information, name, email, phone, make it easy for them to get in contact with you. After all questions have been asked by the investor, ask, what's the next step in the process? That's the call to action. Put it in their hands. Let them know that you're thinking of them. And then this is important, right? Let them know that you want them to invest in you. What's next? Let them know that I want to do business with you. What's the next meeting? They tell you a lot of this in HR and recruiting. Like, some people forget to just explain or to voice that they want to be here. I want to work with you. I want you to be a partner. I want your money, right? Don't forget, go to the meetings, the next meeting, and then make sure that you put the next play in their hands. What do we do next? What do we have to do next to get to the next point in the process? Any questions?
So it's me again. I got a question.
Yeah.
So when you're looking for, how do you evaluate venture capital companies, or how do you research these people? Like, how do you research and figure out, okay, what company or what investor, what method is going to be best for me, and how do you find them?
Okay, and the last question was, how do you find them?
Right.
Yeah, okay. So this is important, right? And the answer is very direct, and it's something I mentioned, right? Like, so how we do our research, how we know if a firm or a group is a good fit for us, oftentimes is going to come from you looking at what's in their portfolio, right? You can see what type of companies they're invested in. Are the founders of those companies, do they look like you? Are they from your region? Are they in your industry? That's how you can find potential investors and potential companies. So I would suggest if you're looking for venture capital, look for companies that have recently raised funds that look like you, or companies that are like you, and find where their investment came from. And typically, you'll find where you find other companies like yours that invest in it is where you're going to find opportunity for investment. So I hope that answers that question, right? That part of the question. Now, secondly, like, going back to what I said at the beginning, right? Like, relationships is everything. 1% of all pitches, 1%, if you send out a pitch deck, 1% of all those pitches land in front of venture capitalists. 1%. Personally, with our group, we get 2 to 3 pitches a week, right? It's almost impossible to, like, I get pitches on LinkedIn, Facebook, Instagram, and and I can't even imagine these big VC, like, how often they get pitches. Like, it's almost like there's bots that are just pitching, right? Like, all the time. Sending in slides, hitting up contact forms. So the way to beat that, the way to penetrate that noise is just like you do anything else, is you find a person that can lead and make an introduction for you. And how you do that is work your network. Like, somebody in your network, somebody in an accelerator program, somebody in an incubator, somebody that's a consultant or works for the city, or somebody in the finance industry has a contact. And that's what you have to work, is you have to work the ability to get that introduction. And then another thing is ask other people that are in the industry, right? Other venture capitalists or people that work in innovation. An example that I use personally is I'm a part of HBCU VC 31 under 31, and essentially it's 31 individuals that work in venture capital that are the future of innovation, that are Black venture capitalists across the nation. 31 of us spread across the nation. Groups like that, there's tons of groups like that are organizations that organize investors and organize people that work in venture capital and innovation. And even if, like, for example, I'm in that group, even if I'm not the investor or the partner that can land you that deal or that introduction, chances are within my network or within that individual's network, there's somebody that can make that introduction. So we want to work groups that are specific for this. Now, I'm not going to, I'm saying this not just because we're an accelerator, but to be honest with you, in my life, I have not seen more value come for startups and entrepreneurs than I've seen in the relationships that are built in incubators, accelerators, and programs that are for entrepreneurs. And the reason I say that is because you have people that have a shared interest in seeing your project succeed or seeing your startup succeed. So work those relationships, see who they know, see if they know a partner at a firm, and that's how you break through the noise. Otherwise, you're playing a numbers game where you're putting in 100 applications and getting one. It's 1% is on average the number. So we want to make sure that we cut through that noise and get those relationships started. Any other questions in regards to what we have discussed today? I'm going to get into the second and last slide, which is words of wisdom, if there are no other questions. Okay. Great. So I'm going to leave you with these words of wisdom. There are no right number of slides, only critical points you need to cover. Be 10 times better. Remember, we talked about not the 2 to 3 times better that breakdown shows us. We want to talk about why we are 10 times better at one thing versus 10 times more things, doing 10 times more things. Being 2 to 3 times better isn't good enough to a venture capitalist, right? Because they're looking for that 10 times better person, company, etc. Focus on your customer's number one problem, not their 4th or 5th, and definitely not their 10th, right? Prepare yourself for rejection. Ask why and learn. Don't take it personally. If you're looking to fundraise, if you're looking to work in sales, if you're looking to succeed in life, you need to prepare yourself for the possibility of rejection. Specifically in this area, right? Like we're talking big stakes. You're going out looking for $1 million, right? There's a lot to gain. So you're looking for millions of dollars. There's a lot to gain. So don't expect for it to be easy. Don't expect for you to not get no's and to not get rejections. Ask why and learn. Don't take it personally. This is a numbers game. This is money. This is a lot of people's jobs and livelihood to invest this money. So get your feedback. Don't take it personally. Adjust, pivot, do what you have to do, and then boom, be there to fight another battle and do it again. There are lots of great ideas, but few can execute them. So if there's anything that you want to rely on and that you want to show as your strength, it's going to be your execution, right? Because anybody could write a plan out, but you want to show why you and your team are the ones to execute it. Time is your biggest enemy, right? That's a big word of wisdom. Build quick and cheap and iterate, pivot when needed, right? So time is your biggest enemy. Don't be a perfectionist, right? That's not like being a perfectionist does not go hand in hand with being a good entrepreneur because you get in the way of yourself, point blank period, right? If you are not embarrassed by I don't know if you guys have heard this, but if you're not embarrassed by the first version of what you're building, then you launched too late. If I were to show you the pitch decks for Airbnb, the pitch decks for Zoom, for any of these companies, you would laugh. You'd be like, there's no way these are multi-million-dollar companies. If any of you guys, I mean, most of you guys are young, but if anybody remembers like the first versions of Facebook and things like that, like comparably, they were terrible. So don't be afraid to launch early. Don't be afraid to launch afraid, right? Don't be afraid to launch scared. Don't be afraid to launch unprepared. You want to build quick and cheap. Time is your biggest enemy. When you're innovating and when you're moving, there's somebody else doing the same thing. Your biggest competition to raising capital, companies with equally great or better ideas and teams, but more traction at your stage. If you were a VC, which would you pick, right? So an example is you're building this technology product with this really cool feature, and it's really great, and you're getting this traction, and then Instagram adds a feature that does the exact same thing. If I'm a VC and I'm looking at Instagram that has this reach and all the stuff that they can tap into, more traction, more customers, et cetera, I'm putting my money towards that process that's already in place. So that's going to be your biggest competition. It's going to be somebody that's already has the things in place that you're looking for this money to build, but just doesn't have the idea. That's always going to be your biggest competition, because it's essentially all they need is the direction to go in, and they can then activate, the rest and solve it, the rest. So that's always going to be your biggest competition in raising capital. And then from there, your best opportunity is going to be a big growing market with a big problem and an elegant solution where you can achieve, again, that lifetime customer value over the cost of acquiring a customer. And then lastly, you don't know the market. You don't ask often, pivot, change when you have to. Listen to the market, listen to your customers, listen to investors, listen to the people around you. Of course, don't take advice for everybody, but you don't know, the market does, and never forget that. The market is the number one equalizer. It's always going to, surprise you. It's always going to not lie. The market doesn't lie. The numbers don't lie. It's going to respond to what you put out in honesty. So thank you, everybody. Now it's time to secure the bag, right? It's time to go out and get that money. I'm excited to continue to see what you guys are building. I hope that this presentation makes you a little bit more comfortable when it comes to your pitch deck fundamentals, building a pitch deck, going out and securing that money, securing those funds, securing the bag. And I appreciate everybody for spending this time with us this evening. I'm going to open it now to any more questions. Does anybody have possibly their chart that they might have finished and want to present? But yeah, I'm going to open the floor. Any questions?
Where can we get the presentation, like the actual, so we can actually look at the, is there a PowerPoint? Was there a PowerPoint?
Oh, this presentation?
Yeah.
Yeah. Okay. So I'll upload it as soon as we get off to the app.
I have a question. Can you hear me okay?
Yes. Let me, I'm trying to see who's speaking. Okay, there we go. All right. Yep, I can hear you.
Have you, what examples of weaknesses have you seen on pitch decks that companies have shared?
Okay, so like the company's weaknesses?
Mm-hmm.
Okay, so of course, right, access to capital is always going to be a big one, because you're sitting in front of people that are giving capital. So that's going to be a weakness, access to capital. Depending on what you're offering, say if you're doing something where you're looking to have a brick and mortar component or something where there's a physical location, that's a lot of times that's going to be a big weakness, is location security, right? Because that's another big cost. So if we want to look for our weaknesses, right, as somebody that's asking for capital, let's follow the dollars. Let's look at where we don't have the capital to apply that to, and that's typically where we're going to find our weaknesses. So for example, another example is team, like the adequate team and adequate staff to execute the goal, right? That's going to be a weakness often, especially in the early stage, right? Because you might have a strong core team, but typically you're going to need some of that venture funding, and you're going to need some capital to acquire the human capital and team that's necessary to fully execute and scale what you're building. So a lot of times that's going to be a weakness. And then I guess another like weakness I would say that you see often is going to be the customer acquisition process kind of being down, right? Because a lot of times individuals might have an idea of how they acquire their customers, but a lot of times it takes the traction, it takes being out there selling your product or your service to gain that insight. So in your early stages, that sometimes is going to be a weakness that we typically see, is like really having down the information about acquiring your customer, having down those metrics. Okay, so do we have any more questions, right? Before we
yeah, I have a couple questions for you.
Yep.
Well, actually, I have a request. I I know I'm not part of your group, so I wanted to ask you a few questions at the end of the Q&A sessions,
Yep.
separate from this presentation. Is that okay?
Yeah, that's absolutely fine. I'll be here afterward to field any questions.
Thank you.
No problem. Any other questions now? And lastly, I'll ask, are there any questions specifically on the process of things to consider or think about when you're sitting directly with a VC or pitching directly to a fund or in that fundraising process? Because a lot of times, a lot of these words and things it's one thing to see the slides and to see the information, but it's another thing to just ask like what it's like or what might somebody want to know when you're actually asking them for money, right? So please feel free to ask any questions, and I will try my best to answer if there are any more. Okay. So I'm going to assume that there are any more questions. So the last thing I'll say, guys, is never forget.
Tunji, I
Yeah.
just wrote a question in the chat.
Okay, let me try to get in there.
Well, I could just ask it.
Okay.
So I wrote, does it matter if I need to brand my pitch deck? Should I be worrying about how it looks visually or if it's packed with information? Like, where's the balance?
Okay. So I'll say this, guys. I'll speak completely from my experience. They will tell you to make your pitch deck look pleasant, but to not focus on making it look good, to worry about the information. And that's true, right? Because again, 10 slides or less, simple, straight to the point. We don't want it to be too distracting. That's the advice they'll tell you, right? But my experience is this. Every time that I've gone in there and made my presentations look good, like just made them dope, like with memes or like with graphics, every time somebody on the other side has said something about it. Like I'm talking, I've sit in front of like multi-million-dollar corporations. They might not get what I'm talking about, but they'll be like, oh, that looked great. That slide, those slides looked great. That presentation looked awesome. Like, so what I would say is, what I would say is like, textbook, they'll say not to worry about that. But the truth is, like, just like your appearance or anything else, like when you're looking to impress people and you're looking to, impress people, they recognize it. And that extra energy to make some colors match or to add a little humor or to add some icons or to add some graphics or pictures, like they notice that. And, that might not be the deal breaker into whether they hand you millions of dollars, but it will, and it might be something that makes them remember you or makes you stick out or they appreciate the extra effort. So I would say, don't be crushed by the expectation of making it look amazing. But at the same time, like I said, if you want to be noticed, if you want to make a presentation that people remember, then you want to add those extra details and that extra effort. Thank you, Aaron. Are there any other questions before we finish up today?
Just one. Do you have any thoughts on, whether or not to leave something behind? Or I know it's all about getting the next meeting, but is it bad to do something like that?
So no, I always share my deck before I get there.
Mhm.
And I don't share it too early before I get there. So if I have a meeting or a presentation on the Friday, then I'm sending it Thursday, right? Because again, like I want them to make their decision, like when they have the space, no pressure from their colleagues to be able to digest it. So I say all that to say that what I would leave behind is your deck. Like just make sure you leave behind your deck, make sure you leave behind your card. And if you have a demo or something like that, leave that behind as well. But for the most part, your deck is the thing that is leaving enough for them to say, hey, I got to bring that guy or that young lady back for that follow-up meeting. Right? Again, the attitude is we are providing an opportunity. We're not necessarily selling ourselves, so we don't want to, you know, buy them an edible arrangement or anything like that when you're pitching. But leaving a card, deck, and some branded materials is always a good touch for reference. Although I'm sure they wouldn't mind the edible arrangement. Any other questions? Okay, everyone. But we're going to conclude for tonight. Thank you, everyone, for sitting with us and going through this pitch deck fundamentals. I'm always available to field any questions about fundraising VC. I have a lot of experience in pitches and fundraising. I'm currently fundraising as we speak. So I always have a lot of feedback or some space to be able to advise or help out with that. But outside of that, if you have any questions, reach out to me personally. I'm available. Again, this deck is going to be available for you all for the information. It's a lot of good information in here, organized well, and I would use it just like I use anything else like this as a reference, right? So, you know, we have some templates that we also dropped in the app. Check out those templates. 10 slides or less, you can fill them out. You can really copy them. I mean, that's what they're here for. They're provided by different resources for you to be able to fill out and make an easy deck with. But if you ever need an example of decks of companies that have raised rounds, I can always share them with you. Or if you need any templates, let me know and I will share them with you. There's a lot of resources on this. So this is not something you have to reinvent the wheel or shoot from the hip from. This is something that you'll be able to find some resources and some help with. All right.
And question, are they going to be having an opportunity to present their pitch decks?
Yes. So so we have 2 opportunities that you'll be able to do that. Specifically at the end, we will be having a demo day where we are inviting investors, individuals in the entrepreneurial ecosystem here locally and regionally that have shared interest in investing in startup founders like you all. So that's the big opportunity that you'll have to present your pitch deck. But before that, we're going to have like pitch deck sessions, especially around leading up to Startup Weekend, which we'll be having in March, where we basically do practice pitches, getting ready for the pitches that come along with Startup Weekend and Demo Day. So anyone that wants to practice their pitch prior to the official pitch on the Demo Day in front of investors, there'll be some opportunities there to present as well. And also, you know, if you also want some extra practice or some extra intention in practicing pitching your demo, there are some other groups. Like, again, I told you all I'm a part of one, the HBCU VC group. I have another group that is a group of individuals that are a fund as well that field like open presentations and open pitches. So I can always put you in front of somebody that is open to pitching to. Of course, I can't guarantee any, you know, follow-up or involvement, but there's always the availability for me to put you in front of somebody to practice your pitch, or a group of individuals that work in venture capital. That's always a resource to you, and they actually love to do that. That's something that I personally like to do as well. And then also, as we find out about them, we will post any pitch competitions that pop up within our regional ecosystem that we're able to be involved in. Any other questions? Okay. Well, if all hearts and minds are clear, I'm going to stop this share and go ahead and wrap up. Thank you
Okay.
everybody for coming. Again, I'm going to hang out for a few minutes afterwards if you have any questions.
Yeah, I have a couple questions.
Yeah. So let's chat. And then again, I'm always available as a resource for this. So I look forward to hearing some of you all's pitches and being able to help in any way I can to help you secure those funds and secure that bag. Thank you so much, guys. Have a good evening and
Thank you.
looking forward to the next.
Thank you.
All right, everyone. Thank you. Happy holidays. Okay. How are you?
Hey, thank you for taking a few minutes with me.
No worries.
Can you hear me okay?
Yeah, I can hear you just fine.
Okay. So I currently am in an accelerator.
Okay, great.
So was familiar with you through, I think I saw you on Instagram.
Okay.
Okay. And I think I followed up with that. I applied to one of your programs. I don't remember which off the top of my head.
Okay.
And I received a couple messages from your office or whomever works with you.
Yep.
But currently I'm in an accelerator for Voodoo TV.
Okay.
I follow you. I think we follow each other on Instagram.
Yeah. I've seen your concept.
Okay. So yeah, so I'm in an accelerator and we do have a demo day coming up after the holidays.
Okay.
So I'm not available for anything between now and then. But I was under the impression that you had some type of weekend program.
Okay, so yeah, we have two programs right now that we are working, and one is the Build Bold program, which this workshop was a part of. So it's a 4-month program, pre-accelerated program that essentially is helping entrepreneurs to have a prototype or MVP and a pitch deck by the end to be venture ready to pitch.
Okay.
And then secondly, we have Startup Weekend, which is the weekend program. Currently, we do it maybe 2 to 3 times a year. It's essentially a program that is a global program under TechStars and Google for Startups. And we run the Google for Startups TechStars Startup Weekend here in Jacksonville locally.
Okay.
So essentially, Startup Weekend is a weekend experience where individuals come together to pitch and build a startup within 54 hours.
Okay.
The program you're currently in, is it local?
To where I am, yes.
Oh, where are you located?
I'm in Maryland.
Oh, awesome. What program is it?
I'm doing Conscious Ventures Lab.
Okay, I have to look into them. That's awesome. I thought maybe you're down here. That's great. I mean, I know there's some good options up there.
So every program is local now that every program is online.
Yeah, exactly. Now, yeah.
You're not.
Yeah, now it is. Yeah, and I mean, but that's been awesome for us, like because we've been able to bring in instructors from across the nation that typically might not have been open if it wasn't, primarily virtual. So we're definitely thankful for that part of it, at least.
So, like I said, I do have demo day coming up, and we're heavily preparing for that right now. But you mentioned a couple of things that might be helpful to me, and I don't know if you mind me taking advantage of those. Is a couple of pitch practices and a couple of pitch groups you talking about?
Yeah, absolutely.
I'm looking to add persons to my team. I wanted to add 1 or 2 more persons to my team before demo day, but I'm not sure if that's possible. But if you have some suggestions or referrals, that would be
for team members.
Yes.
What type of team members?
I'm looking for persons with a professional background who are perhaps interested in or have a background in maybe pitches and presentations, definitely, because there's going to be quite a bit of that. Maybe you showed some very good information that would be very useful as far as putting together a projection. So someone in that area. So those two things would be very helpful.
Okay, so we have definitely like Quentin is really great at putting that. He's an investments expert and financial expert. He can help with that. I'm not sure as far as being a team member, but he can certainly, you know.
Can he be an advisor?
I mean, I think that's something that you can ask him.
Okay.
But I do think that I think that's something where we can help for sure. Is that part of it? And then I know I can certainly help with helping you to prepare for the pitch.
Oh, great! Thank you so much.
Yeah, so I can provide some tips and feedback, and then if interested, I can also put you in front of a group of people to do a practice pitch.
That would be wonderful. Thank you. Also, I know that this is a session particularly for your lab, but I would really like to have access to the presentation you gave tonight.
Absolutely. So I believe you signed up on the network, right? So you're able to see the information there. So
I'm not really sure.
Yeah. So either way, what I can do is I can email you the presentation, but I'm also going to include it on the network. So that's the app.elevateventures.com.
So I download your app?
Yeah. So you can download it or you can just access it on your desktop.
Oh, okay.
So app.elevateventures.com, and then you log in and you'll see, I'm going to add it there here shortly.
Okay.
But also, is it Tressa or Teresa? Teresa, okay. So also Teresa, though, I can email it to you right now.
You want me to put my email address in the chat?
Let's see, maybe. Hold on. Uh-oh. Yeah, go ahead, please.
Okay.
I'm handling that right now.
Okay.
How did you like the presentation, though?
I thought it was excellent.
Awesome.
You did an amazing job. There's so much great information, and that's why I'm asking for it, because I'm going to probably be using it to help me get prepared for demo day coming up the end of. I have until the end of January, so the demo day is last week of January, I think first week of February.
Okay.
So all the help I could get.
Awesome.
Thank you.
Yeah, let's try to get some help to you quick. Let me pull this up. What percentage are you with your pitch deck? Like, how close are you to finishing it up?
As you know, I've rewritten my pitch deck maybe about 30 times. So I'm rewriting it again now. I would say I give myself about 70% there.
Great. It's a great number to be at. As you said, in the January, right?
Yeah.
Yep.
But yeah, I'll do